just so you have them at the ready. And those links are for a discount for TrendSpider. We're going to be using their software tonight. Use that link, then use CT25Z to get 25% off. And then 14 days free to the Contrarian Trader. Silver and gold level memberships get TrendSpider for free. So those are the links that will get you started with the Contrarian Trader, or if you don't want to join our service, just use a TrendSpider and you'll be good to go. Hey, good evening, Colton. How you doing, brother? Good to see you. I'm just going to check and make sure that we are live on Facebook. Hello, Facebook community. Let's check out Twitter. Hello, Twitter. All right, let's get to it. So what we're going to do tonight, the purpose of Thursday Night Stock Charts Live is to discuss headlines, discuss how we're doing on the week, but to really discuss how does it appear that we're poised to close out the week. Let's do a pulse check of the market to decide what we want to do as we proceed into the end of business on Friday, which obviously means the end of the week. And we want to see how we're setting up on the weekly charts because they will give us a clue of as to where we may be going next week. So we're going to really focus on that quite a bit. Before we do, Google was hit. Let's go over to zerohedge.com first. Google. You can go back to my individual videos on Google, Facebook, going back to March, April 2018. And I've warned about this company and the probability of antitrust action at some point in time in the very near future. RL, hey, how you doing? Welcome. I warned about antitrust action that was pending, and sure enough, yet again, more antitrust action. Google slides after antitrust probe expands into search and Android businesses. This comes after yesterday they get called to the carpet for accessing data, keeping a database of your medical records or certain people's medical records without, I think it's against HIPAA, the HIPAA laws. I don't know much about it. I don't know if they did anything wrong. Maybe they didn't. I'm not that smart. All right, but apparently there's more controversy that's brewing there. So the stock just keeps going higher. You know, after the first announcement of antitrust, I went short of Google, and I had to stop out. The stock just kept going higher after the initial knee-jerk reaction. After hours now, we'll take a look at the chart. In the after-hours session, you know, not a major move, really, in the grand scheme of things. You know, ultimately, the argument is going to be, do we need to break up Google? And that's going to be the big question. I remember back in the late 1990s when AOL was just coming into its own, and they were viewed by Microsoft as their nearest competitor, if you could believe that. And that was their argument to the government because the government wanted to break up Microsoft. And they fought off the government, but the hammering that Microsoft took during that time frame was just amazing. It was really just beaten up. I expected the same for Google, but they're shrugging it off right now. So at some point in time, these shares are going to begin to break once the chickens really do come home to roost. But as it stands right now, I'm still not ready to short, but I'll be keeping an eye on it, that's for sure. So as we discuss, actually I should say before we get into the other headlines and we talk about sentiment, how do we think the market's going to go? We're going to get bearish, we're going to get bullish. I actually went short of the Russell 2000 yesterday, very small position. I probed to see whether or not we were going to get a breakdown. I'll go over the chart in a moment as to why we decided to open up a short position. And overall, we booked profits on a swing trade of LABU this week and on CURE. That's CURE. That's a leveraged ETF putting you long of healthcare. And we may need to get long of them yet again. But our gold mining trade is bouncing back this week. We continue to sell covered calls, generating premium. I know, Patrick, I don't know if you're out there yet. I got your email. I know you sold more covered calls. So we continue to generate income on that trade. And it's doing quite well. We've changed up our strategy a bit, meaning that we're not staying close to the money on the strike prices. We're going out further. For instance, I sold yesterday the $32 strike price expiring not this Friday, but next Friday. And we generated more premium. And I think we're down slightly on the trade, but come Monday morning, the time decay will really begin to evaporate on that trade. So overall, a good week. We haven't done much, just waiting. We're bouncing back on our gold mining trade. Gold is certainly doing well on the heels of a bond market rally. It's a bit overbought, I should say, on an intraday basis. So a good week, not a great week, but certainly not a bad week. And we're certainly not sweating bullets like we have been with this correction in the gold sector and the miners, precious metals, whatnot. And that's because bonds have rallied and the dollar has not really capitalized on recent gains. So let's talk about headlines. Then we'll talk about why we got short of the market. Then we'll go into the weekly charts of the major averages and see how we're poised to close out the week. So we're seeing headlines like this. Stock slump on reports that China's struggling. The U.S.-China struggling in phase one deal. I've been saying forever now, there's no deal. There isn't going to be a deal. There's not going to be a phase one deal. There's not going to be a phase two deal. There's not going to be a phase three deal. Not until after the elections. I bet you that if they do not sign a deal at some point in time very, very soon, meaning the Chinese, if they don't come to the table, President Trump is going to raise tariffs. It's in his DNA to do so, to raise the pain level on the Chinese. I think he should do it. And really, because they're in a world of hurt right now with their economy. We're not doing great, but they're doing a lot worse, especially with Hong Kong on the front burners over there. So I think that he should ratchet up the heat on the Chinese economy, and I would expect that to be his next move, because there's not going to be a new trade deal. It's going to be going into the elections to generate nationalism. He'll probably fire up the nationalistic heat against the Chinese, especially if they invade Hong Kong, because he's going to foster that pro-democratic U.S. sentiment, get sympathy going for the Hong Kongers, and that'll turn people against the Chinese. If we get a sell-off in the stock market, he'll blame the Federal Reserve for not acting quick enough, and then he'll blame the Chinese for their activities over in China and not being good faith negotiating partners in the trade deal. That's my opinion, sticking to it. All right, next headline up. The Federal Reserve braces for year-end repo turmoil, announces $55 billion in 28 and 42-day repos to flood the system with cash. So not QE is alive and well. Merry Christmas. The stock market, what do I think it's going to do, despite the fact that I opened up a short position yesterday? I think it rallies. Now, why did I get short? Before we go to the weekly charts, why did I get short of the Russell 2000? What I was watching for was a rally in bonds. We got that. With that rally, I was expecting a breakdown. First, let's go to a 30-year bond price. And you can see that on this 4-hour chart, we've consolidated nicely. We've broken out this week. We're on a tear. And I was expecting money to come out of stocks into the bond market. It wasn't to be. The market has been floundering a bit, but net, it's doing okay. Why did I get short of the Russell 2000? Let's finally answer that question. 4-hour chart. I spoke about this on Swing Trading Today on Tuesday morning. We were watching for a break of support. Here you had it. A break of support, not below one support level, but two support levels. And we closed there. So we went short of the Russell 2000. We're about flat on that position right now. It's been floundering. We are, however, putting in a higher low. I suspect that they'll try to rally the IWM into Friday's close. We'll see whether or not that fades. If there's a failure to recapture support and we begin to roll over and take out the lows of today, I may add to the short position. Now, we need to identify, of course, when are we wrong, right? We can always be wrong. So we need to say, okay, when am I wrong here? I'll be wrong when the shares of the Russell 2000 recapture support and appear to be closing out the week back above support. We stop out, we take a small loss, then we'll look to get long of the market. Let's go take a look at the weekly chart of the major averages and see how we're setting up. Now, I'll be using TrendSpider again. I posted a link in the chat stream. You get 25% off of all of their levels. They have a 7-day free trial offer as well. And again, it's included with my silver and gold level memberships. I don't have any type of a special going on right now. So, and I don't anticipate doing one anytime soon. So let's begin. With the S&P 500. Weekly view, S&P 500, we're looking pretty good here. Let's throw up some overlays. We pulled back this week. We have, for the most part, engulfed the prior week's move. We've retested support. And should we close where we closed out today or better, in all probability, you're going to see a breakout on the S&P 500 to the upside with this upper band of resistance at current 312.47 on the spiders. That will be resistance. We have a breakout on the RSI. Stokes looking good. What's not to like here? The S&P 500 is looking good. And again, it goes back to, I opened up a short position, but we're not going to talk our book here. There's a reason why we got short. We may be wrong. We need to get ready to say, okay, we're wrong. We take a small loss. We weren't crazy short. We move to the sidelines and we look to get long of the market. Now, the Dow Jones, outside reversal week thus far, it appears as though we are going to close the week out strong. You don't know what can happen tomorrow. We have retail sales coming out tomorrow morning. A lot can happen. But at current, the Dow Jones is looking good. So this is reinforcing my bias that in all probability, we are probably going to continue higher on the markets absent a geopolitical event. Taking a look at the IWM, the small caps, of which we are currently short, they're not looking as good as the large caps as they continue to retest a support level. But one of two things is going to happen. Either A, you're going to see a sell-off on the large caps to match the IWM, the Russell 2000, or B, you're probably going to see a rally back on the Russell 2000. One of the two is probably going to happen this week, and we'll keep an eye on it, and we'll trade accordingly. I mean, I'm ready to say I'm wrong on the trade and that we need to cover our short position, but I'll tell you, if we look to close down below this lower band of support or at the lows of the week, I'll probably lean into the short side, if not tomorrow near the close, probably on Monday on a continuation breakout or breakdown week over week. So IWM is holding support at current. We stand ready to cover our short position, and we may need to get long of the Russell 2000. No emotion here. It's just business. Taking a look at the banks. Now, yields have risen this week, right? Let's go to the TLT for a moment. This is the 20-year bond ETF, putting you long of the 20-year bond price. This is a great week so far. What's not to like? When you have the 20-year bond rallying, when you have the 30-year bond rallying, when you have the 10-year bond rallying, you're getting a pullback on yields. That's good stuff. So, nice chart here. We hit resistance this week. I think that we've probably seen the highs of the week. Perhaps we'll even get a pullback and a retest of support. But what we're looking for is follow through to the upside this coming week. So, given the fact that we have the bond market rallying, that's usually bad for the banks. Why? It's bad because their net interest margins, NIM, look it up, NIM, they get compressed. Basically, it's the spread on their loan book, and ideally you have a rising interest rate environment for the banks to do well with. But don't forget, they loosened up the Dodd-Frank rules. These guys are now able to gamble with more of your money, depositor money. But remember, when you deposit your money with a bank, it's not your money anymore. It's the bank's money. And they can decide to give it back to you or not. And at current, we've pulled back on the week. It makes sense because yields pulled back, the banks pulled back. What did we do today? We rallied off the lows of the day. We have a doji star formation. The bias is still to the upside. In all probability, we are going to break out here. We will be looking to buy the banks. So net, a good week so far for the banks. Taking a look at the biotechs, of which we covered our position, we booked profits. We are down on the week. It was a good decision to make. We have some resistance above. So let's take our crayon out. And I lost my trend line. All right. And there you go. So I want to know when the biotech sector breaks out, because they probably will. But that doesn't mean we're not going to get a pullback first. Okay, so these alerts are very critical so that we're not obsessing, staring at charts all day long. We set it and forget it. Now, what else I know here is I want to overlay my weekly or monthly support levels and resistance levels, and apparently there's not enough data. So we'll take that off. As a matter of fact, let's throw it back up here again. There we go. There is. Okay. Here's our monthly resistance on a weekly basis, overlaid on a weekly chart. So we have more upside potential here. We have resistance up above after, or if we should break out above this resistance level here at around 52.73. We're coming up here to around $58 per share. Now, when I would really get excited here to get long of the biotechs on a pullback is right down here. If we touch or bounce, this support level, I want to know about it. And we'll keep this active. It's a weekly chart. Let's keep it active for 2 weeks. All right, so our criteria is set. I don't care about the biotech sector until A, we break out, or B, we pull back and retest support, or both, right? Otherwise, it's dead money to me. So we'll watch it, and we move on. We look for better opportunities. Now, emerging markets have pulled back this week. And I warned about this over the weekend that we had a bearish key reversal week last week, that we'd probably get a pullback. We got that pullback. Now the question is, where is there a support level by which we would want to get long? And before I decided I wanted to get long, I need to take a look at the U.S. dollar. I want to see the break of the U.S. dollar, because emerging markets will do far better if the dollar breaks. And so far this week, this is the dollar bull ETF. We have a bearish key reversal week. Oh, and if I didn't already mention this, 6:19, we're already 19 minutes in. Members, 7 p.m. tonight. I'm going to send out a link in a short while at about 6:30. Once we're done here, we're going to have a members private group session. It's your time, whatever you want me to go over, charts, whatnot. We'll have a group session, mastermind session, and join me there. You'll get a link in your email immediately following Thursday Night Stock Charts Live, just like we did last week. Okay? All right, so, and also, if you watch this on YouTube, if I could ask you to hit the like button, subscribe button as well, and that bell. There's a bell button. Get notified of when I go live real time as well by clicking the bell button, and there's like select all or something like that. I got to get a picture of it so I can remind myself. Anyway, if you could do that, that would be great. If you're watching this on Twitter, please follow me there and retweet to a friend. I'd appreciate that. Thank you very much. So the dollar, weekly basis, bearish key reversal, no break of support yet. Now, I want to take a look at the dollar a bit closely, or more closely here, because it's been weak. It just hasn't broken yet. And today, this is an outside reversal day today on the dollar. So what we want to do here, I clicked the wrong. This is wrong. Sorry about this. Remove. Okay, so there's our resistance level. We've broken support. Let's go to Thinkorswim. I want to see how we're behaving on the Dixie. Very, very important if you're trading emerging markets. You want to see the dollar weak. Yeah, the dollar's under a lot of pressure here. It hasn't broken on a 4-hour basis yet. But we are very, very close. Actually, we have broken. We did break. We broke this morning. I haven't been looking at it. And I saw the topping action, and that's what led me to believe that we're probably going to break on the Dixie. We broke this morning. Now it's a matter of longs out there. Can't believe the dollar rally's over. And what they'll probably do is I wouldn't be the least bit surprised for them to rally it, try to recapture the support level, and in all probability that'll fail, and you see the dollar roll over. And if that happens, we'll watch for a bid on emerging markets. Well, ideally, we look for a support level to get hit, a reversal bar. Then we look to get long of emerging markets. Let's go to a daily chart of emerging markets. This is the EEM on a daily basis with a monthly overlay. Let's get rid of the monthly overlay. It's really not important to this discussion. All right, so this is a pretty easy one. What I would like to see here, 4-hour chart. What I would like to see here on emerging markets is a breakout above resistance Now, I'm adding in here a note, possible long daily basis for a reason. I'll tell you why in a second. Because this would only be a small opening positions. I never go jumping in with both feet, looking to open up my entire position to one shot. What if I'm wrong, right? If I'm wrong, then I take a big loss. In the case of the IWM, shorting that, buying the TZA. If I'm wrong, I didn't go jumping in with both feet. I take a small loss. I live to play another day, right? So I've done that. As a young trader, I have done that, very, very arrogant, and lost my shirt a bunch of times. I've learned not to do that. That's the discipline. So we'll keep this live for the next 5 days. We're allowed to get triggered twice, just allowing for a couple of head fakes here or there. All right, so our alert set is here. You see, when you're doing this live, you can't edit, and it could be really embarrassing at times. I could feel my cheeks being red. I don't know whether or not you could see it on the camera, but guaranteed I am flush right now because I can't speak properly. All right, so anyway, daily chart of when we would want to get long of the EEM with an opening position has been set. Now, when would I want to add more aggressively? Well, that all goes back to the dollar being primary concern number one in my book. Because if I want to open up a large position of the emerging markets, I want to see the dollar tanking. If the dollar doesn't tank, yet EEM trades with the rest of the market, I'll buy the EEM. I'm just not going to get overly aggressive because the dollar's not tanking, and I don't think that the emerging markets are going to outperform. So, when do I want to add? I want to add more when we break out. I already have this alert set, so I'm not going to set another one. When we break out on a weekly basis above this upper band of resistance. If we get that and the dollar is weakening, I'll look to buy more emerging markets far more aggressively if the dollar's tanking. Now, when I would really get excited about getting long of the EEM is if we touch or bounce off of weekly support all right. All right. So this would be, we'll keep this live since it's a weekly chart. We'll keep it active for the next 10 days. Twice. Boom. All right. So the alerts are set. If we pull back, retest the support level, we'll look to open up a long trade. If we break out on a weekly basis, we'll look to add more to that trade. Simple as that. You add on strength. You reward yourself for being right. Do you pay up? Yeah, you do. But you're paying a premium, right? If you're buying something that's doing well, then you're going to pay a premium for it to outperform in the future. So pay for the very best. If it's outperforming the overall market with the dollar in a decline, pay up. As long as it's holding support levels and breaking through resistance on volume. All right, we spent enough time on emerging markets. I want to talk about the utilities for a moment, and then we're going to segue over into precious metals. And we have a couple of minutes left here. The utilities have pulled back off of their highs because bonds have rallied. And they've rallied very powerfully. Now, the utilities, I'm looking to buy I have it down here, an alert set as a matter of fact, down here. The UTSL. I was looking for a breakout, but we actually pulled back. And the UTSL, I'll be looking to buy should we rally further tomorrow. So members, stay tuned for a possible alert on UTSL. Going back to the XLU, the utility sector, the UTSL puts you long. It's a leveraged ETF of the utility sector. I'd rather pay attention to the price action on the underlying index. And you could see that we broke down dramatically last week. What are we doing so far this week? This is the value of Thursday night analysis. We can appreciate now that, wow, this time last week, we had the XLU, which is breaking down because bond yields were soaring and nobody wanted the utilities. Now we're looking to buy the utilities at garage sale prices. And at current, we are trading back above current resistance. It should now act as support. So the utilities are looking pretty good. The question is, do we close out the week above this support level here? That's the key. Can I create an alert to advise me? I want to test this. All right. So if we close the week down below the support level, there's only one trading day left to go. We'll just keep it active for the day. I want to know immediately. And there we have it. If we close down below on a 30-minute basis below the support level, the alert will get fired, and that'll alert us to say, you know what, avoid the utilities. It's closing down below support. It's not holding the gains of the week. Therefore, we avoid and we do not execute a trade on the UTSL, which is looking very similar to the XLU, which is good. But if that XLU fires off that avoid alert, we don't buy the UTSL. Moving on. We have a couple more minutes here. The IYT. Yeah, so this is a problem for the market. And I warned about this the other day. And I'm a big believer in that the transportation index generally leads the market. And you can see that this week we're down big on the week. We're off the lows of the week. But last week was a good week. It wasn't great because we failed to hold the highs of the week and we couldn't hold the breakout point. So this week's price action is really no surprise. We have an inside week. We haven't taken out the highs of last week. We haven't taken out the lows of last week. So we're kind of in no man's land at current. So what I want to do here is I want to get rid of the weekly support and resistance levels and overlay on a weekly chart the monthly. And they really don't help too much here. All right, so we'll bring back up the weekly. You can tell I haven't rehearsed this. So the transports are a concern. The transports have broken down this week. The market hasn't. The Russell 2000 is weak, but not as weak as it was yesterday. So keep an eye on the transports. I'll be watching to see how we close out the week. If we close out the week at the lows of the week, the market has a lot of problems. Even if the S&P 500 closes out the week at the highs of the week, yet the transports close near the lows of the week, I avoid stocks. I'll avoid them because I'm expecting that even if we get a continuation move higher next week on the S&P 500, it's all BS anyway. It's probably going to be on light volume, and it's only a matter of time before it reverses to break down along with the transports anyway. So I won't buy the market. So you can see I'm looking at vertical signals to give me the signal that it's okay to buy the markets. And the transports are at current telling me, you know what, don't go buying. You may want to look to get short of the market. And the dollar weakening may help the overall market because it helps our exporters. Remember, manufacturing is in a recession at current. So the break of the U.S. dollar at current may be bullish for stocks, especially emerging markets. So at current, I am a bit torn about where we're going to be positioned moving into next week. In all probability, it will be to the bull side. However, the transports have me concerned. The dollar weakening here has me a bit optimistic, but we'll keep an open mind. What really matters is how we close out the week. And what we'll do on Saturday with members is I put together the week ahead commentary where we do a very similar recap to what I did this evening, but now we have the week it's closed out. Now we see, okay, what did the big traders do this week? How did the institutions position themselves? Were there any institutions out there buying or selling? We'll know by the volume bars. So we'll do a review of the market's price action, how we close out the week, a review of our positions, a review of our watch stocks, and that's the week ahead commentary, and we'll discuss that on Saturday. What else is there to talk about here? 30-year bond price. We're off the highs of the week. Yeah, this is not accurate. 30-year bond price should be up. All right, I'm not going to waste time with this. I don't think that this quote is right here. Unless that's the yield. Oh, it's the yield. Okay, so it is accurate. Okay, so we're good. This is I thought it was the bond price. It's actually the yield. So that makes sense. That's down. Oh, you know what? Energy. I want to talk about energy. And then we'll leave off members. Then we'll go into that private group session. Bearish reversal bar this week. It makes sense because the transports are down. So what I'd be looking for here on energy is a rally up and through this upper band of resistance here. Let's take a look at a daily chart. So energy may be setting up for a rally here. Let's check the price of oil. You don't want to go buying the energy sector unless you have oil, which is moving up higher. And oil is stalled out here. Natural gas is not having a great week. We were down today. Good day yesterday. How are we doing on the week? We're off the lows of the week. So we may have a buy situation on our hand here fairly soon for nat gas. Let's check out a 4-hour chart. So I would get interested in nat gas on this pullback. Were we to break out here on a 4-hour basis, and I would trade the UGAZ or GASL because that's optionable. UGAZ doesn't have options. And I may look to sell puts on GASL. I'll bring up that chart in a moment. And when I sell puts, it's a bullish trade, not a bearish trade. A lot of people hear puts and they automatically think bearish. It's not. I'm not buying the puts. I'm selling the puts, generating premium. Duh. Okay. Denny, hey, how you doing, brother? It's late again. That's all good. We'll keep this active for a couple of days. And what I'd really like to see here, as a matter of fact, another trade that's setting up here, a nice entry point would be down here. You never know. You could get a flood of sell orders overnight or in the morning. This would really be an ideal support level to buy at. All right, so we're good to go here on UNG. We'll leave off with technology as a whole. Technology looks good here. This is a 4-hour chart, though. Let's go to the weekly chart. Technology is breaking out on a weekly basis. And again, you know, I don't talk my book. You know, I've been saying this entire video, or not, it's actually not a video. I'm live. Hey. I've been saying this entire live stream that we opened up a short position. I'm not going to talk my book. I'm not going to try to back into the right decision on a trade that is probably going to be wrong because we're looking at the XLK. The XLK on a weekly basis broke out last week. It closed there. This week we pulled back. We traded down below it. We've rallied back. Now we're back above it. If we hold this support level, technology is going a lot higher. It's validating this week the breakout of last week. It's a great chart. So again, I'm not going to talk my book here. Let's take a look at the semis. I said that was going to be the last chart. I lied. All right, so the semis, they've stalled out here a bit, consolidating gains. Worthy of a drill down here. Let's see whether or not we have any monthly resistance above. Nope. Good, rock solid support below here. I mean, outstanding. Because you have 2 weekly support levels, which are coincided, and you have a monthly support right below that as well. It's beautiful. So a really rock solid floor below. Your risk reward, where you get long of the semis, especially on a pullback, to support at, let's say, the 127.50 level. Outstanding support from a risk reward perspective. Daily chart. I like the setup here. We had a bullish reversal bar today. We didn't put in a new daily high, but we closed off the highs of the day, and that's good. So what we have setting up here is a wedge formation. I'll throw up some lines here, make it easy to see. So our risk-reward entry point is fairly simple. If we get a breakout, in fact, I would set up 2 alerts here on the semis. If we get a breakout, daily basis, I want to know really quick. 30-minute basis. This would be a momentum trade. We'll keep this active for the next few days. Now, I also want to know when, after we break out, when we get a pullback and a retest of the breakout point. So I'm going to create another alert. And I want to know when we touch or bounce. In fact, I also want to know when we want to break through, because that'll trigger a stop loss order. This assumes that we are long of the position. I want to know very quickly, 30-minute basis. Keep sensitivity low. SMH. And I want to look to add or stop out when this alert is triggered. We're going to keep this active because the assumption is that we only care about this alert where we long of the position. So we're going to keep this active for a while. So here we go again. If we break out, an alert fires. When we pull back and we retest, another alert fires. If we break through it, it fires, because that'll tell us, okay, look to add at the end of the trading day if we hold the retest, or look to stop out if it appears poised to close down below the support level. So that's the game plan with the SMH. And folks, if you're interested in TrendSpider, it is free with our silver and gold level memberships. There is a link in the chat box, or just go to thecontrariantrader.com. And if you just want TrendSpider, they have a 7-day free trial offer. I have a 14-day. And simply click that link. Use, what's their discount? CT25Z is the discount code for TrendSpider. Get 25% off. And tell them Bob sent you. All right. And that is it. Folks, have a great evening. Thanks for joining in. If you could click that like button, it would really help me out. I'd appreciate that. And subscribe to the channel on YouTube. Leave a comment. I'll definitely get back to you. If you have any suggestions, feedback, I love it. I thrive on it. If you watch this on Twitter, please retweet to a friend and follow me there. Everybody have a great night. Members, I will check you out 7 p.m. Eastern Standard Time. That's in 16 minutes. I'll send out an email alert. a link to enter the private group session, and we'll go over the symbols that you want me to go over. Everybody have a great night. Talk to you tomorrow. Be well. Do, do, do,